Good morning, distinguished guests, members of the faculty, and my dear friends. A very warm welcome on the first day of Conventus 2023, the annual management conclave of International Management Institute, New Delhi. The pace of change in our world is unprecedented, presenting us with intricate problems and difficulties that can be difficult to comprehend. Despite this, humans have consistently assessed the circumstances, led transformative efforts, and found innovative solutions to surmount obstacles encountered along the way. Conventus embodies this spirit, with its roots in Latin means coming together, a congregation with a purpose. On this note, we are proud to present Conventus 2023.
My fellow compare Radhika and I, Meghna, shall take you through the Finance Summit of Conventus 23. This year, Conventus is structured around the theme Embracing the Winds of Change, RUPT, rapid, unpredictable, profound, and transformative. Our environment is rapidly evolving, presenting abrupt changes that challenges cause and effect understanding. Our approach is evolving, our methods are in the transition. But with a renewed focus on the global issues, we can better prepare for the future. Building resilience and mindfulness helps not only strengthen ourselves, but also helps in overcoming anxiety to approach the world without any preconceived notion.
One of the basic dilemmas of modern society is how to keep up with change in the rapidly changing scenario. The secret is to always be ready for change, because change is the driving force that sets apart those who thrive from those who merely exist in the world that is constantly evolving. In an era of relentless technological evolution, where markets and new business models emerge, blurring the traditional industry boundaries, adaptation is paramount. Survival in the competition requires proactive response. Today's business environment embodies RUPT principles, urging companies to innovate, adapt, and seize opportunities to maintain leadership amidst constant change. To overcome anxiety in a non-linear world, we need awareness, an unprejudiced approach, and effective use of data and of information available at our disposal.
Now, before we proceed further, we would like to play the Conventus 23 theme video.
The pages of history remind us of the reality that our world can swiftly change its course. Events like pandemics, economic shifts, and unexpected crises echo through the fabric of time. Like a ripple effect, the consequences of these events rapidly reshape the present, creating the perfect chance to gear up and pave the way for an unforeseen future. Adapting to the RUPT paradigm that signifies rapid, unpredictable, profound, and transformative is essential to tread the waters where constant change is the norm. Like a phoenix rising from the ashes, businesses that skillfully surf such changing tides, using hurdles as stepping stones and transform challenges into opportunities, emerge triumphant. To learn from their success, we must reflect on their experiences and grasp what sets them apart.
To share with us their valuable insights, we are honored to have amongst us Mr. Siddharth Talwar, Partner CFO Services at Grant Thornton Bharat LLP, Mr. Pradeep Pandey, Director at Grant Thornton Bharat LLP, Mr. Mitesh Desai, Vice President Finance Control at Morgan Stanley, Ms. Aruna Singh, Director Finance at Microsoft, Mr. Manav Mehra, Finance Director at Ericsson India Private Limited, and Mr. Venkatram Jayanti, MD and CEO at India Post Payments Bank. Last but not the least, we are pleased to announce the moderator for the Finance Summit, Dr. Prateek Bedi. I would like to thank all the panelists for being here with us today. Also would like to request Dr. Prateek Bedi to please come and felicitate our panelists for the day.
Our first panelist, Mr. Siddharth Talwar, is a partner in the CFO services team of Grant Thornton Bharat LLP and has been with the firm for more than 15 years. His expertise includes accounting advisory services, audit services, and working with diverse clients across sectors. Mr. Talwar is a chartered accountant and industry speaker and a contributor to print media on accounting standards. We welcome you, sir.
Our next panelist, Mr. Mitesh Desai, is the Vice President at Morgan Stanley. Mr. Desai is a chartered accountant with 17 years of experience, mostly in financial control, accounting, regulatory reporting, risk management, treasury management, business finance, audit, and compliance. He has previously worked with Mizuho Bank, Standard Chartered Bank, and Nomura. We welcome you, sir.
Our next panelist, Ms. Aruna Singh, holds a key leadership position as the Director of Commercial and Financial Planning and Analysis at Microsoft, with prior experience as CFO for India and Asia Pacific at GE, financial controller roles at Microsoft, and a background in audit assurance and process optimization. She holds a chartered accountant certification and a strong background in finance management and decision support. We welcome you, ma'am.
Our next panelist, Mr. Manav Mehra, is the Finance Director at Ericsson India Private Limited, concentrating on the telecom industry. He graduated from IIM Bangalore in 2002, majoring in finance and strategy, post which Mr. Mehra has done a variety of senior roles in IBM India. Also, he has been the CFO of Oracle India. We welcome you, sir.
Our next panelist, Mr. Venkat Ram Jayanthi, MD and CEO of India Post Payments Bank. He is a seasoned banking professional with over 27 years of work experience. He is known for driving IPP's growth, profitability, and financial inclusion efforts. Mr. Jayanthi holds degrees in mathematics and economics and have completed an executive management program at IIM Calcutta. We welcome you, sir.
It gives us immense pleasure to introduce the moderator for this session, Dr. Prateek Bedi. He is the Assistant Professor of Finance and Accounting at International Management Institute, New Delhi, with a Masters in Finance and Control and a PhD in Finance from University of Delhi, having cleared both the levels of FRM certification and the first level of CFA certification. He has worked as the Investment Associate at JLL India. Dr. Bedi's research work has been conferred with the Best Paper Award at several platforms. Sir, we are happy to have you here with us today. I would like to request our club secretary, Mr. Love Grover, to please felicitate our moderator, Dr. Prateek Bedi.
The theme for this year's Finance Summit is Navigating Financial Frontiers, Thriving in a Landscape of Change. In the dynamic realm of finance, the journey from survival to thriving is marked by the ability to build resilience and seize opportunity amidst disruption. In the face of relentless disruption, the financial world stands at a crossroads, where mere survival is no longer enough. Such dynamic challenges have made us rethink finance using the RUPT model. Let us now talk about these aspects in brief.
Rapid adaptation. Financial professionals must swiftly adapt to the market trends, regulatory updates, and technological advancements to stay ahead in the ever-evolving finance world, which requires agility in strategy and operations. Unpredictable agility. In finance, uncertainty is the norm, shaped by economic shifts, global events, and societal changes. Navigating this intricate uncertainty requires agility, foresight, and smart risk management. Adapting swiftly to the unexpected marks those who flourish amidst the financial unpredictability.
Profound reshaping. Financial industry is evolving due to innovative models and technologies, necessitating a commitment to sustainability, ESG considerations, and sustainable finance options to thrive in the changing financial landscape. Transformative innovation. Financial institutions must embrace transformative innovation to navigate the financial landscape, leveraging emerging technologies like AI-powered analytics and blockchain solutions. This culture of innovation drives institutions beyond traditional finance, propelling them towards growth and resilience.
Now, before we proceed further into the session, let us have a look at the Finance Summit video. to request our moderator, Dr. Prateek Bedi, to embark on the intellectual ride with the upcoming discussion. Over to you, sir.
All right. Thank you so much, Meghna, for that introduction to the entire event and Conventus 2023. So, Finance Summit, like always, is going to be our first event for Conventus, and we really hope to set a benchmark for rest of the summits coming our way. So, first of all, a very good morning to all the students, my fellow colleagues from the finance area, and the director of the institute, Himadri sir. And a very warm welcome to all the panelists. And first of all, heartfelt thanks, from the entire students and the finance club of right. So heartfelt thanks from the Students' Union, IMI New Delhi, and the Finance Club, because although as academicians we always try to give the industry perspective in the classroom, while teaching finance, but then having industry veterans share their own experience adds another dimension altogether to the learning of the students. So in fact, I was just making some calculations right now. Um, there is more than 80 years of experience sitting on the stage, barring mine because I hardly have any. So we really hope to have an insightful panel discussion this morning. So now keeping in line with the theme of Conventus 2023, that is, deliberating upon changes in the business world which are rapid, which are unpredictable, which are transformative, and which are profound, we actually zeroed down on 4 key topics which we'll be discussing as part of this panel. And I already had the opportunity to interact with all the panelists, and we zeroed down on this set of 4 key topics slash themes which will be the part of this panel discussion. So we'll start off with the first theme, which is financial inclusion. We'll then move on to the transition towards green energy, followed by survival of businesses amid regulatory and legal changes, and finally we'll deliberate upon the applications of AI, ML, and NLP and how it is changing not just businesses, but their future as well. So starting off, with the first theme of our panel discussion, that is financial inclusion, we have the MD and CEO of India Post Payments Bank, Mr. Venkat Ram with us. And I think when it comes to financial inclusion, there is no better person, than someone who is leading a payments bank, because, payments bank were actually formed with the mandate of reaching out and offering last mile banking solutions to every nook and corner of this country. And when I say every nook and corner, I basically mean the remote rural areas, wherein, let alone, a bank branch, we don't have access to electricity. So you can't even charge a mobile phone even if you buy one. So just to give you a background, now we understand that financial inclusion by definition means availability and accessibility of financial services to all the citizens of the country in an affordable, timely, and equitable manner. So there should be no bias in terms of offering these services to the citizens of the country. Now, it is very clear that governments, in fact, prior to the Modi government in 2014, the UPA also had made some concrete developments with regard to progress on the front of financial inclusion. In fact, it is also said that the Pradhan Mantri Jan Dhan Yojana, which is the first scheme that comes to our mind with regard to financial inclusion, was started by Dr. Manmohan Singh by another name back in 2008. So we have made quite a progress. So, if I look at the current developments, which have taken place in recent years, so, PMJDY is 150 crore bank accounts and still counting. We have direct benefit transfer, so we have eliminated, middlemen. Then we have the PM Mudra Yojana offering credit to micro and small enterprises. And then we have the e-rupee, which is a voucher-based payment system. Again, it ensures that, if cash is being transferred for a specific purpose and it is not used for that purpose, it is a waste. And to counter that problem, we had the e-rupee, which is a voucher-based payment system, can only be used for purposes that it is designated for. And then we have digital wallets and a spurt of digital wallets in the past 5 to 10 years. Now these are some positives. If we look at the journey of financial inclusion so far in India. And Payments Bank, like I said, there are 6 of them right now, started in 2014. And so, they were having a clear mandate of actually offering the essential banking services, not credit, so to say. In fact, the limit for Payments Bank to offer credit is curtailed, by law. And in fact, that is why we see that, Payments Bank are right now partnering with commercial banks. So that credit, is coming from the commercial banks through the Payments Bank to the end user, right? And finally, to sum up things, so we have the Jam Trinity. So the Jan Dhan Yojana, the Aadhaar card, and the UPI system, that is the mobile payments. All of these three put together have actually laid down a solid foundation for, financial inclusion to foster in the coming years. But despite all of these, all of this progress, there are key pressing challenges, that we get to see. So for instance, if we talk about the PM Jan Dhan Yojana, now record says that 1/5, that is 20% of these accounts are inoperative, average balance hovering around 4,000, transactions not happening, despite the fact that, the PM Jan Dhan Yojana by default offers the RuPay credit cards for free. Whosoever opens his or her account as part of this scheme, we see that 1/3 of the PM Jan Dhan Yojana account holders do not have a debit card. And when I talk about insurance penetration, because remember, when we talk about financial inclusion, it is not about banking solutions. It extends beyond that. We have insurance services, we have pension services, we have access to investment platforms, so that money can be diversified away into different asset classes. So, you know, India is a country, which has 15 branches on an average for, 1 lakh people, which is a dismal record for even an emerging economy. And then we have, loan sharks, we say sahukars in rural India, who offer, credit to poor farmers at criminal rates, 12% per month, okay, 12% per month. Uh, entails to 144% per annum. So, given these challenges, sir, I would first of all like you to walk us through the current status of financial inclusion in India as you see it from your perspective, because you're working on ground and meeting these challenges day in, day out. And then tell us, what is the way forward and what are the corrective steps which are needed to be taken, in conjunction with the participation of all the three involved entities, that is the government, industry, and the end user. Over to you, sir.
Yeah. Thank you, Pratik. Thanks for the opportunity. First of all, I thank IMI management for giving us this opportunity. And yeah, you spoke quite a bit about financial inclusion. Actually, stole my thunder. But nevertheless, I think that sets the context, in a very lucid manner. So before we get into that, I would like to spend few minutes on the transformative journey that we've seen in the area of financial inclusion. Maybe 15 years back, what we would have thought about, unsurmountable has been surpassed. And thanks to the advancement of technology that we've seen over a period of years, and not only that, the development of the whole ecosystem, the interoperable ecosystem which the country has seen, and the democratic way of approaching these things have really helped solving some of these problems, be it development of products from NPCI, or be it having a DPI platform which we today boast of, that is digital public infrastructure. So all of these have really helped. So going back to 2006, See, 2006 is when RBI has actually relaxed banks or permitted banks to engage agents. Till then, there was no formal mechanism for banks to actually solve the problem of financial inclusion. You rightly put it, financial inclusion is all about solving three A's: accessibility, affordability, and availability. So it requires right kind of products, right size of products, and a channel, an accessible channel. So in order to solve the problem of channel, RBI permitted banks to engage business correspondents and business facilitators. And from 2006 to 2000, say 12 or 14, it has gone through multiple iterations and edits. Like initially, there was only a limited set of people, individuals, and entities who were permitted to become business correspondents. But later on, RBI permitted to such an extent that except non-banking finance companies, everybody can become BCs. So that was one of the change. And technology was another big problem, wherein if you look at 2006, the banks were still depending on a lot of paper-based account opening process where you have to give an account opening form and KYC verification. That's the biggest problem, because one of the regulations about KYC verification is it can only be done by a bank official. So an agent cannot verify the KYC. So there is a process behind that. And that was also kind of working out as a challenge. But nevertheless, RBI said that you can also come up with products like no frills account and some such product relaxations were given. But that was also not to a large extent has solved the problem. But if you look at the number of accounts that banks were able to open, they were largely dependent on DBT mandates. And even in 2008, I think some of the post offices were given the mandates by state governments to disburse the DBT related payments. And governments found some sort of an outsourcing arrangement through this sort of network, and that's how they were able to do this. But that again, largely manual and was not completely traceable or trackable. That was also fraught with a lot of challenges. But come 2013, 14, you've seen a lot of developments, and especially with Aadhaar coming in, I think that solved a lot of problems, especially the identity problem. And not only that, even the KYC verification process. Taking cognizance of that particular technology, RBI has also relaxed, stating that an agent can do a KYC verification through a biometric verification process without the involvement of a bank official. That actually is a turning point in the area of banking, because that's when you saw schemes like mass movement like Prime Minister Jan Dhan Yojana, wherein banks were able to open these accounts en masse. And let me tell you our own experience that with the help of these technologies, it hardly takes just 2 minutes for us to open an account. So over a period of time, one was the identity solution where it solved the KYC verification process. The other important problem that you spoke about is the utilization of the account, the inoperative accounts. And that to a large extent solved, wherein it was made compulsory to route around 34 odd DPT schemes directly through bank account. So which means a mandate was given that no more cash-based dispersals. Because in cash-based dispersal, what happens is there is no transparency. And number two, it takes a hell of a lot of time. The cost associated with cash logistics is very, very huge. So which is where government felt that it actually saves a lot of costs. And let me tell you, it almost saves around 20 to 30,000 crores per annum. That's the kind of cost savings we get if we route this entire DBT disbursements through bank accounts. And that problem of inoperativeness solved through this DBT disbursements, routing of DBT disbursements through this account. And third most important challenge was about accessibility, which is when the regulator stepped in and tried to review the situation, because from 2006 to 2015, yes, there were a lot of business correspondents also stepped into the field, and with the kind of relaxation that regulator has given, a lot of banks have entered into partnership with the telecom players. Like when I was working with Axis Bank, we partnered with 2 different telecom players, because telecom network has a deeper reach with their retailer network. And one of the problem that we were able to solve is that, yes, making these services accessible to these telecom retailers, and especially at a smaller size, was a reality. So that's how the accessibility problem got solved in 2014-15 when Nachiket Moore committee went into the details of the whole gamut of challenges that the financial inclusion space was facing. So one of the takeaways from that committee was that to give or to permit more newer entities to join the fray, especially in the banking. And that paved way for the differentiated licensing norms, wherein two different and distinct set of banking entities or entities were permitted to undertake banking. One was the microfinance institutions, which were already operating in rural space and even in urban space, and where they were serving a lot of underprivileged customers. So one of the challenges for them is they were not able to raise deposit. And as you rightly said about the higher interest rate, and some of these microfinance institutions were also lending at a very, very high rate because the cost of operations is very high, number one. And the cost of money that they raise, that is also very high. So with a combination of these two can only be resolved in case if they're also given an ability to mobilize deposits. So that's why by converting, say, a microfinance institution into a bank, one, they'll be able to raise money at a lower rate, and at the same time, they'll be able to pass on that reduction in interest rate to the end borrowers, and which is what has happened with a couple of microfinance institutions got converted into small finance banks, and that indeed helped in the area of financial inclusion. That was one. That is about availability of credit, and affordability problem is also solved. Then coming to the accessibility part, where the other type of entity was the telecom players and the postal network. Because postal network also, if you see, in our country, there are over 160,000 post offices. So typically, every post office covers 4 to 5 villages with an operational radius of around 6 to 7 kilometers. So which means if postal network is permitted to become a bank, it can solve the entire accessibility problem with one stroke. So before the postal network or the post office getting converted into a bank, the number of rural branches were just 30,000. So that number had gone up from 30,000 to almost 2 lakhs because with this addition of post office. So that's the kind of advantage which it brought, number one. And number two, the postal network operates through postman. And in rural areas, we have, we term them as Gramin Dak Sevaks. So they go door to door. They do varied set of things. They deliver money order, they deliver letters. They not only deliver letters, they also read letters for some of the people who do not know how to read and write. So that's the kind of advantage and a stamp of trust that these people carry. So in a way, I can say that by converting the postal network into a full-fledged bank has solved a lot of problems. One is in terms of delivery and in terms of convenience, because a lot of these postmen go door to door, so which means you can actually deliver government benefits directly to the doorstep. So this way, I think a lot of problems that were associated with financial inclusion got really solved. But one difficult and different problem which still remained unresolved is the credit. So we solved for accessibility, we solved for savings, we even solved for protection. Wherein you have insurance schemes like PMJJBY, PMSBY. Plus, there are also other customized insurance products which we were able to go to the market with, and we're able to penetrate the insurance product to quite a bit. Because if you look at the insurance penetration per se in our country is less than 4%. And it's much less than the global average of 6%. So which means we still have a lot of ground to cover when it comes to insurance, because one of the challenges associated with not having insurance is that you get into a debt trap. Some eventuality, some uncertainty that happens in the family, and then you end up raising money through debt, and then that actually puts you into a debt trap. So those are the kind of protective measures that can be solved through these kind of product measures. So how are we solving for credit? And that's where I would say that the technology advancements would help a lot, and also the ecosystem development. Like for instance, today we have ecosystems like account aggregator, Sahamati, where all financial institutions and regulated entities can join together and can share the data. You talked about data privacy and data sharing, In fact, data is going to be one such collateral, especially for lending small value loans. We've seen the growth of microfinance institutions where through a collective mechanism, through peer pressure, we were able to develop an ecosystem, or we were able to develop a model, a credit model, which to some extent really worked. But then in order to scale this up further at an exponential level, like how we've seen UPI scaling up in a shorter span of time, probably we require that UPI movement even for credit, wherein credit should be accessible for these sort of people, maybe on tap. And how can you make this possible? One, because this requires the solution between demand and supply. So if you look at demand, yes, there is a demand. But then obviously from the supply side, we are not able to meet the supply side because of the need for certain information, need for certain data points. So which is where I think based on certain data, if we are able to build certain credit history, and we are also trying to work towards making some of these customers credit ready by promoting savings habits, by developing some sort of a financial trail of transactions wherein their credit worthiness can be assessed. So these are some of the measures, if we are taken over a period of time, can actually solve the problem of credit, because the moment data is available, then it will be easy for any lender to lend this money. And the second thing is the cost of credit delivery. That is also being high, and that problem was not solved earlier. Now with so many entities like payment banks coming into play, we can front end. We've already invested into that network, distribution network. So we can market that credit product. So the cost of service delivery can be much lower. So which means even if you want to say lend something like 1,000, 5,000 rupees on a short-term basis, that should be possible through these kind of mediums, where you use data as a collateral, and then you have some sort of a security mechanism where you are able to recover at regular basis. Because for these kind of loan amounts, one, you need to remain flexible, and at the same time, the installments will have to be probably spaced in such a way that it matches with their cash flow. So which means there is some element of innovation can also help when it comes to the product delivery for this segment of customers. And then from the government side, we've already seen the kind of support that the government is able to give, especially with ECLGS, where during COVID period, certain loans were given with guarantee from the government side. I think if that guarantee is properly utilized with a ground level mechanism of entities like ours, and a combination of lending institutions plus institutions like us and government, I think can really solve the credit problem. I mean, it is not really impossible for us to solve, but I think we are taking steps towards that. And we can take help of the technology, the growing technology, and maybe AI can be one of the technology enablers for us even to solve the credit problem for this segment of customers.
Absolutely. So, sir, you have almost, hit all the points that I raised. Uh, so now to carry forward this discussion, I would like to now bring in Mr. Manav Mehra, who comes from Ericsson, and Venkatram sir was actually talking about, leveraging the reach of the telecom industry in order to foster financial inclusion in our country. And sir, I would like to understand from you that, how do we resolve this systemic challenge in the banking sector? And, Jeff Abbott, who is a novelist, has put it very aptly. He says that a banker is a person who is ever ready to lend you his umbrella till the time the sun is shining, but he snatches it away the moment it starts raining. Now, the point is that salaried people who are a part of the organized sector keep getting calls from commercial banks across the country, for credit, for jumbo offer loans. But now when it comes to people from the unorganized sector, the drivers who drive our cars, these hawkers, these peddlers, the maids who come to our homes, these people actually get paid in cash, and cash we know has no trace. So if you do not have a credit history, it is beyond imagination that a bank would offer you credit. So then in that case, how do we solve the problem for these people working in the unorganized sector, so that financial inclusion is actually achieved in its true sense, because these are the people who actually need credit and they don't have a credit history?
Thank you, Dr. Bedi, first of all, for inviting me, and I would like to thank the students for this opportunity. See, the challenge with credit is it is still governed by regulation. So you might find financial fintech companies that would be willing to extend credit through a systematic process, but at the current moment they're governed by regulation. So I think a change in regulation to allow companies to offer credit would help. Having said that, I've actually seen innovation on the ground in some ways. So I do know of companies that are offering credit to maybe not the lower sectors, but uh, in tier 2 cities, sweet shops. And I was just trying to understand from that person what his model was. So they've installed a UPI machine at the shop. He takes credit, and every day a portion of whatever is collected on the UPI app gets instantly debited back to the person offering the credit. Right? So rather than going through the cumbersome process of getting a bank loan, etc., which they were not able to do for exactly the same reason that you mentioned, a lot of their transactions were in cash. They had no history. They had no way of showing that they would be able to repay the loan. So what this does is they install the UPI app. They saw that there was a steady cash flow through the app itself. They were willing to offer on the basis of the credit app. Now, when I spoke to the person, he said there are still challenges because once the shopkeeper realized that a portion of the payments on the UPI app would start going to service the loan, he started telling people, pay me in cash. Do not go through the app. So there are challenges like that. But I do believe in the scale of innovation in India. I can tell you when we speak about the mobile piece that we've done in India, people from both developed nations and developing nations come here just to understand the scale. I think one of the most common refrains I've heard is what we did in the last 2, 3 years would be equivalent or more than what all of Europe would have been doing, right? What we've done on 5G, I do not think the number of installations that Jio and Bharti would have done can be or would be equaled in Europe today. And the scale and pace at which we are doing, it's incomparable. We go to Malaysia for discussions. What they plan to do in a year, and I'm not joking on this, we actually do in 2 days. So that's the kind of prevalence that the mobile network is doing. That's probably the reason why over the last 2, 3 years, financial inclusion has increased. Has it reached the level that we would want for a country like India? I can't say yes, but it's definitely improved. The last mile continues to remain a challenge. But if you look at other than credit, payments, offering of financial services, they've started going there, right? Credit, I think the challenge remains with regulation until the government figures out a systematic way to regulate how a lender is lending money even at the last level. They won't be able to extend the credit piece out. If they do, if regulation does come in that is allowed, I'm sure there are enough fintechs that will actually allow the process to be much smoother for the people at the end.
Right. So, so extending that discussion further with regard to regulation now, there is no doubt about the fact that RBI has been at the forefront of bringing out structural changes in the banking sector and ensuring that financial institutions as a whole work in accordance with the law. But then at the same time, we see problems like these credit apps, most of them which are Chinese, offering credit, to these people who probably don't even know that, when they sign up for that app, they actually are giving access to their entire mobile data, including their picture gallery, including their WhatsApp messages, everything, to these apps. And, so it is actually the darker side of fintech in the sense that it is probably now creating a distrust among people with regard to these apps and these platforms which are offering credit in such an uh, easily accessible manner. So I would like to ask Mr. Desai. So sir, what do you think that do we have right now, any structural solution that we can implement on a short-term basis at least to counter the problem of this menace of loan apps which are probably not just exploiting but they are threatening our consumer base as a whole?
Hello. Yeah. So on the onset, thanks for inviting me to the Finance Club and IMI. It's a pleasure to be here. So I think most of this comes from the awareness. I think the government is doing a lot in terms of making people aware. There has been a lot of advertisements which has been coming up. We have seen this ad from Amitabh Bachchan. He keeps on reiterating on KBC as well as on other platforms that don't share your data to unknown apps or to people whom you don't know. So I think that's most important. It's all so there is a strong governance which has come from RBI in terms of how the data sharing should happen, and obviously the awareness comes from the regulators and it comes from the government of India itself. They are making people aware, and people have become smart enough now to not share data. Obviously, those that this will be prevalent among those who are not educated and who want easily accessibility to loans and the credits. So yeah, this should be prevalent. But again. As I said, that's where these type of advertisements, this type of type of knowledge which the government keeps on sharing comes into forefront, so that people are aware that you cannot share, you should not be sharing this data. We have come across various there has been this series and web series and all, where people again these web series have actually enabled people to know that you should not be sharing data in the rural areas to unknown people and all. And somewhere down the line, all these has actually cultivated people to curb down sharing data to unknown people or to unknown apps, and kind of bringing a higher awareness in terms of data sharing and all.
So RBI did come up with certain regulations in this regard last year. RBI came up with very clear guidelines as far as the digital lending norms are concerned, wherein the entities who is front-ending cannot store any kind of data. So they are called as loan service providers, LSPs. And the data can only be stored with regulated entities. And that's why you've seen now at least a handful of entities, especially who are operating as fintech startups and who are front-ending the customer, especially for these kind of apps, have themselves got licenses as NBFCs. So that's very clear. And not only that, government has also taken strict measures of bringing down some of these apps, unauthorized apps, who were marketing themselves as providing loans. So there's a great bit of governance which is now getting set in to take care of this kind of problems. And to a large extent, the data problem is solved by way of regulating the banks and NBFCs who were in some way or the other were trying to subvent their primary role, and which is where this created a problem.
So one thing I want to touch upon is I earlier mentioned that the entire financial inclusion has been governed by RBI, and probably there has been lot of governance in terms, not only in terms of reporting but in terms of monitoring as well. So whereas you all would be aware that there is a 40% credit of A and B, C which need to be given. The entire process of monitoring, so there is, in case of rural banks probably, and in case of small finance banks where the percentage is quite high, there are dedicated kiosks, there are dedicated officers who are there, now since women entrepreneurs and especially in rural areas as well, who are coming up. So there is dedicated officers who actually spread awareness in terms of the types of facilities, in terms of financial inclusion which is given, like not only the credits but in terms of insurance and pensions as well. So the entire monitoring process and entire governance process has strengthened in terms of how the credits are given. And I think that awareness is there in terms of the way, in terms of various holdings, and in terms of these advertisements which keeps on coming from time to time. Obviously, a lot of things also spread by word of mouth, with these people and all. So I think in that case, there's a lot of progress, and in terms of not only urban areas but rural areas also. And then the small credits are bound to increase in such places.
Absolutely. So some very valid points being made there with regard to our first theme, that is financial inclusion. And probably I think the broader takeaway for us out of this discussion is that financial literacy has to go hand in hand when it comes to financial inclusion, because till the time the end user is not aware, for example, how to use these platforms or apps which are designed, not just by the government, but, by the industry players, so there has to be enough awareness with regard to the financial instruments which are being offered, their pros and cons, which particular instrument is to be used when, and also with regard to awareness that it is mandatory, whichever state of the society you come from, you need to have, for instance, life insurance. And obviously, industry players are putting in their bit, because now the broader sentiment in the industry, whether it is mutual for insurance, is not to probably compete against each other, but to just broaden the size of the pie. Because like you rightly mentioned that less than 3% of India's population has life insurance right now. So 97% market is still untapped. So with regard to financial inclusion, I think the broader takeaway for us is that financial literacy probably has to be fostered along with financial inclusion. Right. Okay, some very valid points being made there, and I think uh, apart from credit, because that is an ongoing process, all the questions that I raised, I think we got some concrete solutions which are already taking place on ground, right? So with that, I think we can move on to our next theme, which probably is not just the theme of this event or this panel discussion, so to say. It is a global theme right now, and it is transition towards green energy. So starting from the Kyoto Protocol in 1997 and up till the COP26, which happened in 2021, various climate accords have been framed, adopted by, multiple nations as a whole. Um, but then, there are some challenges. Now, I understand that, India, coming from an, emerging market section of the world, has been taking its due initiatives with the formation of the International Solar Alliance, along with France, and then the Global Biofuel Alliance, which was just announced as part of G20 summit uh, this month. So then, it actually, raises questions that, when it comes to the manager, how does the manager actually convince, his shareholders with regard to the fact that he will be able to prudently manage and balance the trade-off between profitability and sustainability? Because since I come from academia, now there have been a series of research papers which have been published and which go on to prove that whenever any particular country signs a climate-related pact, you see the value of the equity shares going down. And so this is something which on a broader level has been proven on the basis of data. So we call this event study analysis in academia. So Aruna ma'am, I would like to bring you in now. So you come from Microsoft, and you basically expressed your interest to talk about green energy, right? So in that context, ma'am, how do we see the role of a manager, because he's the same person who has to bear that transition risk when it comes to shifting towards renewable sources of energy, and he's the one who also needs to convince his shareholders in the AGM that profitability will not be compromised.
Yeah, that's a absolute. First of all, again, like the other panelists, super excited and honored to be as a part of this panel. I think you bring in a very, very important topic, which is green energy. And I think sustainability and ESG is a responsibility of every person on this planet, including all companies. I think one of the things which a lot of countries are doing is bringing in regulations. Okay, so once you bring in a regulation which requires any company, small or big, to look at what their sustainability or the ESG efforts are going to be, their progress, and how they track it and report it back to the shareholders, to the street, to everyone. So I think one of the pull or the push factors is a lot of areas are coming with regulations which make it compelling for every company to kind of see that yes, we do need to move on to this journey of ensuring that we have the ESG efforts. So that's the first thing. Now, how do we convince our shareholders? See, I think first, I kind of say that it's a culture and it has to be tone at the top as well. What needs to be very importantly said that what are your bold goals you want to keep? Because finally you are going to leave an earth or a sustainable earth which is for the next generation and the generator after. So companies like, large companies like Microsoft are putting very, very bold ambitions. They are kind of saying that, okay, by 2030 I'm going to be carbon negative, which means that I am going to remove carbon more than what I'm going to consume. Second, we're going to say that, okay, we're going to be water positive, which means I will replenish more water than what I consume. Third, zero waste, which is basically trying to say that, I'm going to kind of completely say that whatever I use, I reuse, I do not have any waste in the whole process. So these are the three things which every company will have to put. Now, the thing is that it is a journey. It's not going to be a day of this year or the next year. What I would really want to leave is there are 5 things, and he talked about 3 A's, I'm talking about the 5 R's. What every company needs to do, and it is a progress towards it. So it has to be, and I'll come to how we convince. There are 5 things we need to do. 5 R's. The first one is to record. So every value chain or every process of the business, we may have to record. What is it that we are doing for, which is either degrading the environment or what is it that we need to do. Second is we have to report, and which means that we need to track what is the progress against this, what's the data, which we have to kind of look at it, and hence we have to report, and that will help us make the decisions around it. Third is how we kind of reduce using what you just said about the energy. So I can give you an example that we use, data, and we build a lot of data centers across the world. There is a very clear process that how we move. We can't move it in a day. And as you said, it's very important that we don't do any knee-jerk reaction about putting the profitability. It is a journey we are taking in the data centers, so that how do we move to clean energies, but slowly. It's water there, and how do we kind of do that? So that's the third process, which is basically reduce. Second is fourth is replace. Replacing is basically saying that if we have anything new which is coming up, we are not going to go back to what we were doing. How do we replace that with the new kind of energy? And finally, it is about removal. We, as tech companies, we use all these, e-waste is a very, very big thing. That how do we kind of develop that? I think what is most important is that the end goal, everybody's clear that we do need to do it. But we have to convince them of the progress we are making, and then how it is actually useful in the long run for the beneficial of the company. So there is a thing about short term versus long term, and how do we convince that is a very, very important progress or a process we need to go through. So it's a journey, as I was telling you, but every organization needs to do that, and it's a responsibility of every person in this industry and everyone to do that. That's what I would say.
Right. And then, I completely agree with you that, this is absolutely going to take time, and, the corporates need to work in tandem with the government. But then, there is, again, a lack of trust with regard to the application of, the regulations which come on paper. And so this practice is known as greenwashing, right? And so you basically you say something and you do something else. And, so when greenwashing actually becomes a routine phenomena, as in, for example, businesses claiming the fact that they are net zero, businesses claiming the fact that the plastic that they're using for packaging purposes, is not going to degrade the environment, it is less than 50 microns and so on. but when investigations are done, and there are regulated entities like Bloomberg and Thomson Reuters, which actually assign ESG scores across all three pillars, environmental, score, then there is social and the governance pillar as well, and then all of these put together, they come up with a consolidated ESG scores as well. And and probably this is the lack of trust probably, which actually motivated India to take a stand regarding these agencies, and declare that for Indian companies, India as a nation will not accept these ratings, because Bloomberg and Thomson Reuters are probably being biased against Indian companies, right? Because there are companies in the developed part of the world, the Western world, which are indulging in greenwashing, and if the Indian companies are not following the same practice, we are getting lower scores at the end of the day. And there is an ongoing fight between the developed and the developing world as well, wherein the developed world having seen its share of growth on account of unprecedented massive usage of non-renewable sources of energy, are now probably laying down policies for emerging economies to focus on biofuels. So in fact, India has done its share. So for example, we just had this month the Minister of Road Transport and Highways announcing that we'll be phasing out diesel by 2030, and we are making a rapid transition towards EV cars. In fact, the total EV cars which were sold last year in 2022, more than that we have already sold it up till now, that is September. We haven't even reached the 10th month as yet. So with regard to that, my follow-up question is that how are the industry practitioners looking at this menace of greenwashing, and how are they finally putting in place policies to ensure that the consumers trust them when they say something?
So, as you rightly said, that every country or every area need to have their policies around how they want to measure. And, of course, there would be a lot of diplomatic relationships between the different areas on how they look at the treaties and say that, what's the right way of measuring every uniformly across the world is an important dialogue which every government will take with the respective ones. So that's a process which will continue. But as a, from an India perspective, once the policies and the processes are laid down by the government, I think it is important for every organization then to kind of look at what is what I said that, was the objective we need to drive, how do we record it, report it, and then look at how we are, changing the way we are approaching it. It's not, it's, it's a journey. It cannot be done. You need to put your milestones. And those milestones are what we need to agree with the government, the agencies, and how we are looking at. So, and it's not easy to kind of say that, okay, day one, we will try and do it. So it's what every organization, and I can give you examples of how we are trying to do it is because we have 3 or 4 data centers in India, and we need to follow those same green and we know that, we are dependent on a lot of external ecosystems which help us to drive that businesses. So it's a process where you have to bring in the ecosystems. You will have to say that how you will reach those milestones along with those people. And that is what we need to have a dialogue always with the organizations on how we drive that. I think there are 2 parts to it. One, from a company like ours, we kind of say that how we do it ourselves, but we also are trying to say how do we help our customers help to go in that journey. And that's one of the things when we say about sustainability, how do they move from, their own building so many data centers to one where, so I think it's an exercise what we have to do internally as a company and also help our vendors, ecosystems, customers to drive this as a journey. That's what I would kind of say. But yes, it's a process. It will go slowly, and you will have to have the dialogue with business, with organizations, with government, and with global organizations.
Thanks for having me here, and although an unsolicited answer, but just to add on to what Aruna has just mentioned, I hail from the record and report side of the story, which I guess is very critical. So globally, there has been a move towards adoption of consistent reporting standards. which I think from an India point of view, we need to adopt very quickly. We were very fast in adopting the financial standards. I think we need to be even quicker because our journey towards green energy has actually been quicker as compared to the rest of the world. So sustainability standards, while there is, SEBI has mandated some form of reporting for a certain size of companies. I think it is important that corporates need to voluntarily adopt, not really treating it as a mere compliance. It's not just for the top 1,000 companies. They are not the only ones responsible for this planet. As Aruna mentioned, it is everybody's responsibility. And it is for the regulators also, the accounting regulators particularly, to broaden their horizons and make sure that in this new disrupted world, they are gearing up to adopt those standards, bring those standards, and ensure enforceability. We see a lot of enforceability around, financial frauds. There's a lot of punitive measures, etc., etc. But I think we need to see an equal amount of rigor by the regulators in terms of enforcing, disruptions or non-compliances on the social front or the environmental front as well. And I think that's where the regulators in India need to up their game a little bit.
Just to add to what Sir said, that probably a lot here comes from the governance side, as I've been saying that, since in the companies, most of the companies in India or abroad, they would be regulated either by, in case of India, is RBI or SEBI or Companies Act, and in case of abroad, it's Fed. Typically, a lot of insistence is on disclosures. And when it comes to disclosures, obviously it comes down to how the, as you mentioned, how the reporting is done and then the monitoring is done. Obviously, monitoring boils down to there are various yardsticks for the how the carbon emissions, or the reusable energy is, kind of controlled and all. So how these yardsticks are measured, it's on equal parameters for most of the companies, and then how the same is reported and probably on the disclosure sides. So there's a lot of insistence on the disclosure in terms of how what are the yardsticks which are used, and how the company has contributed to the reducing the carbon footprint, or how the reusable energy is getting utilized and all. So these days investors have also become smart enough to start checking on the annual reports and all, because there are, in case of most of these reputed companies, they have started giving disclosure on how what they are doing on the ESG front and all. So obviously then it kinds of builds confidence on the investors about how the company is contributing towards curbing or towards controlling the ESG factor. So I think most of these would come down to the reporting and monitoring and how the governance is laid down by the companies.
Absolutely. Reporting is absolutely a prerequisite for the industry to make further progress on this front. And in fact, as Sir rightly pointed out, that we as an emerging economy have laid a benchmark for other countries, because SEBI has in fact come up with the latest BRSR guidelines as well. So in that context, business reporting and sustainability report, if each company comes up with such a detailed analysis of what they have done at their end in order to ensure that they are reducing their carbon emissions, I think this will go a long way in also spreading awareness, because at the end of the day, while deciding which company to invest in, I don't just look at the financial statements, but probably I look at the BRSR as well. So in that context, reporting becomes a very, very important pillar. So final question with regard to this theme, and this is an open-ended question, because this relates to the role of the services sector, especially with regard to achieving sustainability goals. Because when we visualize manufacturing concerns, it is very easy to understand that what should ideally be their sustainability goals, as in you source your raw material from suppliers who are net zero. You yourself should be net zero in terms of carbon emissions. You don't generate waste. Even if you do, you don't dispose it off recklessly, especially in water bodies, for instance. So all of this becomes sort of very clear when we think about operations of a manufacturing concern. But when it comes to the services sector, I would like, you to drive us through the discussions which happen in your strategy rooms whenever the topic of clean energy or sustainability comes up. Because I suppose that with regard to carbon emissions, the services sector, is way, way, way below compared to the manufacturing sector. So in that context, what are the kind of thrust areas that, services sector, as a whole needs to focus on, and what are the kind of discussions that you have in your strategy rooms?
I can go because being in the tech sector and the services sector, it's very clear as to what our journey is. So first of all, it's about the places we have our offices. So it's about ensuring the buildings we are in is green. It's not about just sourcing, but where we are currently housed at, we kind of put that target as to how do we ensure that there is absolutely a green, everything from energy and utilization to what we kind of use is from that green side. Second is, even in the services sector, the second thing is about the e-waste we look at. And e-waste is significant in terms of how the services sector kind of moves in. So very clear guidelines and how we use and reuse our, e-waste is a very, very important discussion we always have. Third is about energy, and it's very specific because we are in data center business, is about clean energy. When we are building data centers, along with the server e-waste and everything we use has to move towards a renewable energy, and that's the target we always have as a. So I would say that those are the three, and all this finally will kind of look at carbon emissions, water positive, and being zero waste. So I would say that, even the small things of every facet of our supply chain and the delivery of our services, we need to ensure that we kind of look at it. It's not a very, the services sector is a very, you can say that, yeah, it doesn't have a very clear product as such, but whatever we use to get our people, and people is our main, thing, I would say, other than the data centers we have. So how do we ensure that every facet of that we use? That is what the discussions are around.
So most of the service industries have now already taken steps in terms of conservation of energy, and these are very small steps which probably were, everywhere it's sensor based, when you use water, all the taps are sensor based. So these are the electricity in most of offices, it's sensor based. So if there is an inactivity in certain areas, the lights get switched off. So I think already these steps have been taken by most of the MNCs and banks, to conserve energy in some or the other way, and kind of, reducing the carbon emission or the footprint. Other thing is, reduction of wastages. These are also some of the steps which have been taken in terms of, not using plastics obviously in offices and all. And again, there is a lot of workshops which have been taken, by the companies, in terms of, there have been a lot of internally as well, to make aware, in terms of what can we do, towards, towards an ESG complying, citizenship, or, to make everyone aware about how best the approach would be in terms of ESG.
Right. So again, adding to what has been said, because we are in a company that does both manufacturing and services. Yes, you're right. A lot of the discussions that happen tend to focus around manufacturing. What we do try and do is implement policies that will help on the services side. So the offices, for example, as both the teams have mentioned, sensors, we try to conserve energy as possible, but we've done small changes. So we have a lot of people who go out in the field, they use cars, etc. Wherever we have a vendor, we've stopped diesel cars. So we're doing small things like that. There is a cost to it. So again, it's not an easy fix. It's not something that today I stand up and I say, I'm going to change this, because I will then not be running a viable project. But it is being done slowly and gradually. What is good is that services is now featuring in the discussion. 5 years ago, I think all our discussions were around manufacturing only.
All right, absolutely. And I think in a way technology is helping us, do that within the services domain as well, because, after COVID, the air travel has drastically reduced. So, we have online meetings. So, no? It has increased, no? Okay. So, but in that context, aviation industry, being the biggest
All depend
contributor.
on the budget as well. Probably.
Absolutely. But at least, we do have a substitute. So for instance, it saves times, it saves cost. So for example, at IMI, we have shifted completely to online interviews when it comes to the admission season. Right. So in that context, absolutely, you correctly pointed out that services sector, has its bit of role to play with regard to achieving ESG goals as well. All right. So with that, we can move on to the third theme of our panel discussion, which is survival amid regulatory and legal changes. And so now I would like to start with you, Siddharth, sir. You come from GT Bharat, and so in India itself, we have seen some transformative reforms, especially post 2014, whether it is with regard to the adoption of IFRS for all the companies. Initially, we had, IFRS being implemented in FY 2014-15 for, only the top 100 companies, then was extended to, top 500 as per market cap. So Ind AS, as we call it in India, has been now implemented in a full-fledged manner. This is one structural change. Then we had, the rollout of GST, which was again introduced in a phased manner. Then we had, the, historic corporate tax rate cut, which was welcomed by the entire industry as a whole. And then we had the, abolishment of DDT. And since then, we have seen a rise in buybacks. So, these are actually changes which are exogenous in nature. No firm has a control over these changes. These are, policy changes which come from either the regulatory bodies or the government. So when it comes to the consulting bit, okay, of the financial services industry, whenever such changes come up, can you please point out certain common strategies which you suggest to these companies in order to adapt and make the most out of these changes? So common strategies put together for risks coming from changes coming from the outside on which the management does not have any control.
I don't know if there's any solution to that, and the pace at which changes come in the country. And it's actually not the changes which is a little troublesome, but it is the ambiguity of those changes, which makes it even more difficult. If we take example of why go so back in time, let's just look at even the DPDP Act also that has just come in. It is while the implementation date is yet to be notified, and all of us know why they're still holding it back. But it is ambiguous in a lot of senses. A lot of timelines which could eventually lead to penal consequences are not prescribed. Now, what does a corporate really do? Your question is what kind of common strategies or what kind of adaptations can one make? I think the good part about our country is that we have seen a stable democratic framework since the last 75 plus years. All said and done, our courts work, so our legal jurisprudence, it works. So there is in some sense or the other, there is always a benchmark reference point available within the country whenever a new regulation is to be implemented, whether it was the Companies Act which had come in, whether it has been those bits and pieces of the direct tax code which never saw the light of the day, whether it was the Prevention of Money Laundering Act. All of these in some form or shape have existed over the last at least post-liberalization era. Since 1991 we have seen very SEBI is an excellent example, RBI regulations are an excellent example how they have evolved. So a framework has always existed in the country. If I beside DPDP Act, something which very recently happened for the banking sector was RBI coming up with new directions for how the banks would present their investment portfolio in their books. So that is in India. You talked about the accounting standards. We have seen a challenge, and there is a reason why the banking sector there is no it's not as if Indians don't understand those complex reporting standards. In fact, we were the first ones to adopt, some of the complex standards globally. The banking sector has been held back from that, and there are, more illustrious people here to talk about that. But for a very specific reason that we have seen an inherent weakness in the sector, which has been gradually cleaned up over a period of time, and we are today coming to a very financially stable, hopefully a very financially stable, framework. We see that in the stock market, already in terms of the share prices of banks and all of that. But the banks have been kept away from some of those reforms from, where I come from in terms of the reporting, frameworks, because we are not yet ready in terms of our capital adequacy, in terms of, the amount of infusion that, our government finances will need to make towards recapitalizing those banks if, some of those changes are implemented. And I am here referring to some of the loan loss provisioning norms. And it becomes very critical in the context of the financial inclusion discussion also that was happening. We talk about, the financial inclusion index in India today is 60%. I hope that's a fair representation. They do a decent amount of survey, I believe, to get that data. But if that financial inclusion index were to go from 60 to 70 to 82, and the remaining 40% is actually that bottom pyramid that we are trying to address, the credit quality of that pyramid is unknown. It is not really known to the government. If the norms around, the international norms around credit loss provisioning are implemented in India, without adequately addressing how the underwriting of that bottom 40% of the pyramid will happen, it will cause such a big havoc, in the system. And that is why we are gradually moving towards, opening up the regulations for the banking sector, whether it was, initially, coming up with new regulations for accounting for advances, now investments, and gradually this will also see the light of the day. So, we have, the way we advise, from a consulting standpoint, our clients, the companies whom we work with, is to always look at the best practices, which are there globally. Make sure that you don't focus on the minimum compliances. Compliance requirements are, of course, necessary, but you don't focus on minimum compliances, and bring some of those, practices that we see globally with the companies, to our clients, here in India. And I think the banking community has been the most, in fact, the banking regulator has been the most, welcoming of those suggestions. Many of those are still yet to see the light of the day, but you will see them in the times to come.
Absolutely. And you touched upon the DPDP Act, which has come into force recently. So, Aruna ma'am, you manage data centers, and I think no better person than you, to walk us through the implications of the DPDP Act, for, the consumers, who are always at the receiving end, because it is their data, it is about their privacy. So, what are going to be the, medium to long-term implications of this act going forward, and how do you expect, the industry players to react to it? Because it has just come recently.
So, I think this is a very, very, I'm super happy to actually see this act coming to light, and, it's about protecting the privacy of each person of the country, and it is a very important act. I think we've had this, so I don't know how many of you have heard about the GDPR rules. So in Europe, and it's already been prevalent. So this is a kind of a step to, I would say there are some differences between the GDPR and our DPDP Act, but I think it's absolutely the right step towards how to protect the privacy of our people, and it is about how we collect the data of, and how we ensure that they're really digitally, whatever we collect digitally are protected from a privacy standpoint. So you touched upon, what kind of framework we should normally have. And I will just walk through a framework based on the DPDP Act. See, basically every company needs to look at 4 things when we are looking at any changes which come to on from a regulatory standpoint. First is, what are the processes it will impact, especially on, because of the fact that there is a change in the regulations. Second, who are the people who will manage this, and what are the skill sets you will need to manage this kind of a huge, change in the regulations. Third is technology. How are we going to use technology to ensure that we are compliant with the process or what the regulations is. And finally, what's the governance mechanism we will have to overall look at it. So, just, and this is applicable to all changes or all laws which we can. Now, if I come to the DPDP Act, so basically, if I look at it, again, I will kind of box it, it's easier. There are 4 things which we need to look at. First is data collection. Okay, so I think what it has implication that whatever data we collect, and especially in financial banks, and there is a huge amount of data that people collect. So when we collect the data, how are we ensuring that the privacy things are addressed? So consent tracking, for example, how we will keep that data, how much long, so what are we kind of doing with that data? So it's a very important, the first piece is data collections, and what are the contours of ensuring that we are following the law on that. The second is data processing. So, there will be like people like companies like Microsoft can be a data fiduciary, which is basically taking the data and process and doing that, or a data processor, which is basically on behalf of the customer, we have a data center, they load it, but they're doing it, but they're processing it on our. So when the data processing happens, what kind of regulations we need to ensure that that is addressed? The third is the data storage. This law also has how many, what kind of data storage you will need, what is the period you need to keep the storage for. Also, there is a very, I would not say peculiar, but it basically says that if there is any other law in the country which is more stringent than the DPDP, then that will come into force. So, so that's a very, very important. So though, if that's a stringent one, you will keep the data, but you will use it only for that law and not for the DPDP law. So if, for example, if as a customer, I come to a financial institution and say that, no, I want my data to be erased. So you are compelled to kind of say that, okay, now the customer does want the data to be erased, but you will also see that what are the other laws under which do I need to keep the data or no? And hence you will have to kind of take that into consideration before you kind of say that yes. But you can only use that for that law, but not for any other prescription for which the data has been stored for. And finally, I would say that you have to have transparent and accountability in the organization, because it's a very, very important one. Privacy is something which is very, very core to, every, I'm so, I was reading on some that our minister who actually got the law passed, he went to, I think, Nehru Place, and, PAN card was available at 100 rupees and Aadhaar card with 200. So that's the kind of privacy laws we have. Now, we have brought in the law, of course, as I keep saying that, I know they want it to be implemented from 1st of April, but it's not going to be easy because it's a journey again. We will have to, we implemented GST. We've had so much of, I think now we're still learning, but, it's a process. But it's very important that we come up with a law and then slowly kind of, there has to be a huge amount of dialogue between the industry and the government bodies on how we want to regulate this, how we want to do this as we go forward. So that's what I would say from the DPDP.
If I may just add a little bit on the DPDP Act, and the law is ambiguous to the extent, if I may, and sorry, it's my job to kind of poke holes into, punch holes into whatever comes from the government. It is so ambiguous. At one place it says, and that's the interpretation, that data principles, which is we are the owners of the data principles, we have certain duties under the Act. And it says any non-compliance under the Act, you will be, any non-compliance, it doesn't say in the Act, it says any non-compliances, you will be penalized. It's 10,000 rupees. But what does any non-compliance mean? I jump a traffic signal, that's a non-compliance. So it is ambiguous to the extent that it does not really define what does a non-compliance really mean. The other thing which is a little ambiguous, or I would say a little scary, and very different from GDPR, I believe, is the rights that the government has in terms of owning the data and using the data. It gives almost like freewheeling powers to the government to do that, which all of us know in a diverse, complex country like India can be very troublesome.
Absolutely. And in that context, sometimes, when we listen to such critical comments, probably we get a feeling that, is a particular clause in an act motivated by politics, because once the data gets into the hands of the government, that is the ruling party, probably it is going to stay with them forever, and then probably it becomes even more important to ensure that now political parties also come into the government. In fact, the ruling government also comes into the ambit of the act, and the act applies to them in the same manner as it applies to the industry players and the end users. Absolutely.
But the only good part that we must highlight to everyone here is
Yeah.
the penalties are so high
Yeah.
in this act.
Yes.
They run up to 250 crores penalty, unheard of penalties under this act.
Right.
So it's bound to create compliance, but again, a little bit of punching of hole there. It
Yeah.
doesn't say 250 crore, it says per breach of. Now, if there are 10,000 data principles, so is it 10,000 into 250 crores? So it's ambiguous to that extent.
Right, right. Absolutely, and these are very pressing issues because as consumers of so many apps on our mobiles, we tend to face this challenge every day. So for instance, I was just trying to cancel the Spotify subscription on the app, and I had to put in some real amount of effort to find the cancel button. Because when they give you that subscription on the basis of the credit card, it gets auto debited. But now when you have to switch it off, you really, and in fact New York Times was penalized by US authorities for not allowing their subscribers to cancel their subscription in an easy manner. So these are absolutely daily issues which we face with regard to data privacy. All right, but the positive part is that the act has come into place, and obviously now deliberations will be held, and improvements will be an ongoing process. Right, so with that, we come to the last theme of our panel discussion, which probably is the most interesting theme, especially from the perspective of the students here. So AI, ML, and NLP put together. So artificial intelligence, machine learning, and natural language processing. And since the advent of Chat GPT last year in November, which probably has seen the fastest growth towards 10 million subscribers, under a week. It has actually come to the fore, and it has actually become so popular that it is being used everywhere, not just in the industry. So in fact, students know very well that where do they have to use ChatGPT and other NLP platforms. So as an academicians, we are also evolving. So in a way, we have now cut down on our evaluation parameters with regard to group project submission or taking assignments, because we know for a fact that what is happening in the background. So in fact, since we as academicians also write research papers, it is quite interesting to see that now scientific papers are coming, being published in top journals, and ChatGPT is one of the authors. So it helps you, write papers, and you just, put in a paragraph, you pick it up from some other paper, you put in a paragraph, you ask it to, paraphrase it, it will do it instantly for you. So you evade the plagiarism check as well. So, those kind of issues. So, without going into much delay, I have just two questions. First of all, my question goes to Aruna ma'am, and I would like to know from you, since Microsoft is a service provider to a host of MNCs, ma'am, how do you see right now the businessing actually evolving to the opportunities as well as the challenges forged by AI and ML and NLP platforms? And second is, this is more important from the students' perspective, that according to you, what is going to be the future of job profiles, especially from the BFSI perspective? We have a specialized program, PGDM BFS, at IMI New Delhi. And, because I was just, doing a Google search, and I found out that right now the highest paid job in the world is of a prompt engineer, someone who can communicate effectively with a platform like ChatGPT, NLP platforms. So in that context, how are businesses evolving, and how are they transforming their strategies? How are they making the most out of the AI, ML, and NLP tools that we have? And how are the jobs going to change? How is the employment market going to transform?
So this is a topic very close to my heart, and because I come from the organization. So I think digital transformation is there to stay. Everybody is in a very, very different, I would say, stage of digital transformation across the industry. But I think it's very important that they go, it's very important that because of that, and your topic is that there's so much of disruption happening, there's so much of change happening. Very important for every organization to continuously challenge itself, disrupt itself so that they can innovate, they can be relevant in the market. So digital transformation is something which everybody is there. It's just the stage of where each one is. So now coming to, I would say, AI and ML. So AI is not a new topic. So let me just tell you that, and because we kind of do the research, that AI has been there from when the computers came into place, right? So 1956, the computers came in, and then it was supposed to be more, just human intelligence, but in a more efficient way. Machine learning came in way back in 90s. It basically took a lot of data to help us predict what the decision making is going to be. And then it was followed by deep learning. And what they call as deep learning is, they kind of connect the neural networks to kind of take more data to say how you can really predict the future and how you can address that. And finally, now we are at a stage of the generative AI, which is basically content, writing, and helping us to kind of think through that in a very clear way. So I would say that's the journey of AI. But if you look at, what is AI going to help us? Basically, how efficient are you going to be and how effective are we going to be? So those are the two big things in terms of how AI is going to help us in every, process, stage, manufacturing, any industry of that. So that's what it is going to do. I think what is very, very important for AI to be successful and to be responsible, because what you just said, responsible AI is a very, very important thing as we go through this. It's there, it's an inevitable thing, which, because as, at one point, a lot of people said this at 90s, that, this is a very disruptive, this will take away a lot of things. But it's just a very good productive tool on how we have become much more efficient as a human mankind. So I think it's very important for us to look at what is AI going to help us in every stage of life. It is not going to replace the human. It is basically a co-pilot. It is basically to help us to be more efficient, to be more effective, to enable and disrupt ourselves to be relevant in the market. So that's what it's the final, I would say. How we are, everyone is using, and I'll give you an example of, and because just last week we implemented it for a financial institution, it's important to understand the examples of how we are implementing AI. For example, in an insurance company, when there is an accident of a car or something, there would be a photograph, there would be a lot of data, there would be a lot of, documents which would be sent to the insurance claim agent to kind of look at it, read it, come up to the conclusion. So what is AI going to help? It's basically, once you load, if it's image, visual, writing, whatever it is, it's going to help summarize everything and give that. It's like a brain. It's going to work and give you that output to say that, do you want to approve the claim or not approve the claim? And you can really reason it out with that to say that, what are the things you need to see, be it from the picture, be it from what the past history of the person has been, etc., etc. Will give you a very, very succinct response back to say that based on all this information, this is what this is the summary of the information, and that's helping that person to make the decision faster, be more efficient, because you can really reason it out that why should I still approve it, and that AI will give you reasons as to why. So I think that's what is very important, that how it is really helping everyone to be much more efficient and effective. Those are examples. Now from a skill standpoint, I'm also like, a chartered accountant who has been, doing finance and things like that. I think digital skills are very, increasing your tech intensity is the most critical thing. And it is very important for us all to be very relevant, how to use these tools to be more effective. And it has to be at every part of life, because we have to be, if we have to be relevant to the organization, to help the business to kind of grow, we need to understand how to use these tools, how to ensure that we are using it in a way that will help us to be more efficient and effective. So digital skills and being tech intensive is a very, very important thing as, students and everybody go. And it is important with us, and we use this as what we say as the growth mindset. We are learners for life. So every time there is a new technology, new tool which comes in, how curious we are, how we learn that, and we master it is the most important thing I would say to all the students. So tech intensity is very, very important as you go through this process.
All right. So
I'll just add
yes.
something. So while ma'am rightly said that AI is going to help in it's going to be a co-pilot and it help in data processing. But when it comes to day-to-day transaction processing and understanding complex transactions, obviously human efforts will be required. Like I have been working in banks and financial industries in so many years. There is an human interaction in terms of every any complex transaction, any new products, any new deals which comes, and that time obviously we cannot go to AI or ChatGPT to understand how it is. It is our own human application which comes into picture. We have to apply, talk, understand and then process things further. It is going to help in data processing, but definitely when it comes to complex transactions processing and all, it is going to be human application. So obviously there would be a lot of assistance in terms of preparing these PPTs and preparing this complex data churning and all, but when it comes to day to day actually decision making, it is going to be human who has to intervene, and it is going to stay there. I don't think there's going to be much disruption, at least in that space.
The mics don't work. Just one last example of, we talked about the credit growth and that being a challenge in terms of the next phase of, and Manav gave this example of that sweet shop, So that is where this entire credit industry is eventually moving to, with all these fintechs, from a balance sheet P&L based underwriting to a cash flow based underwriting, which is on a real-time basis analyzing so many hundreds and thousands of parameters. I think AI, data analytics, data science, machine learning, all of this will definitely catapult us into the next phase of growth. And Azna rightly mentioned, our intensity towards adopting these technologies is going to keep us only relevant, not even grow, just keep us relevant in the present context.
I just also want to add, I think with ChatGPT, so AI is not new, AI is old. From our point of view, we've been developing these things called self-healing networks. So what the network does, it understands there's a problem and it corrects it based on past data. But with ChatGPT, I think there is a general morbid fear around the world that a lot of jobs will go. See, what will go, at least in the near future, will probably be mundane data processing jobs, right? And I think a lot of people don't need to do that. It's the same activity being done multiple times. Analytical skills, taking decisions, all of that will not go in the near future. But what Aruna mentioned is probably the most critical thing. You have to, as students, enable yourselves to be technologically evolved, right? Every time a new technology will come, you'll have to be aware and you have to use that. ChatGPT is not going to go away. AI is not going to go away. It's a fact. But that doesn't mean that jobs will go away. There will be a significant number of jobs. It's not as if with the advent of computers, jobs have gone away. I think a similar argument was established at that point of time also. We just have to evolve to do it. And as he said, stay relevant. I think that's important.
I would only like to put it the same thing. While machine is learning, we should not stop learning. That's number one. And second important thing, again, with a lot of students being here, while AI is advancing, what we need to shore up is EI, our emotional intelligence, because that is what is required. Technology is always a double-edged sword. We should know how to use it. Technology is a good servant, but a bad master.
Absolutely, and I think that is a very apt note, to end this discussion, because we have the students sitting, and it is absolutely about evolving. I see, there are certifications programs coming up which actually integrate the NLP tools and techniques with MS Office. So which means that while designing, a presentation, let's say for a group project, you can actually do it, using an NLP platform. And, skills like that obviously, are going to make all of us more efficient going into the future. And analytical skills, as you rightly pointed out, are never going to go out of fashion, out of demand. All right, so we have overshot our time, so I'll just skip the summary, and I would quickly pass on the proceedings to our hosts, Meghna and Radhika. So probably we can have a couple of questions from the students, and then we'll end the panel discussion.
Thank you, sir, for conducting an enlightening session. The floor is now open for questions. You can raise your hands and ask the questions.
To us. I have a question regarding the financial inclusion discussion. So there were very important insights regarding financial inclusion, how the infrastructure that is evolving in our economy and the regulations that support financial inclusion. So we can assume that in terms of financial infrastructure, we are doing quite well, and the growth trajectory is more likely to continue. But true financial inclusion cannot be achieved without financial literacy. And like the PMJDY, we know that 20% of the accounts are inactive. A good proportion of the account holders do not have the free RuPay cards. A lot of them are not aware about the 5,000 rupees overdraft facility per family of the account holders, and the 2 lakh accident cover that is provided free of cost. So while we do have all of these facilities, the bottom of the pyramid is actually not aware of these facilities. So how can we drive this change forwards towards a greater financial inclusions? Whose responsibility is it? Is it the financial institutions, the government, or the bottom of the pyramid individuals themselves who will drive these change forwards? And perhaps this, we had a good discussion about the 3 A's of financial inclusion, and perhaps this could add another A to the 3 A's, with the fourth one being awareness.
Yeah, I'll see. Thanks for bringing this up. Financial literacy is a very integral part of financial inclusion. Though a lot of effort has been done, but it's a never-ending process. Given the fact that with the changing or evolving technology and products, financial literacy also will have to keep going on. You talked about the inoperativeness. I would like to throw some light on why that inoperativeness actually sets in. One is because of migration, because we work very closely in rural markets. So a lot of people also migrate from rural to urban in search of jobs. That is one of the major reason of being inoperative, number one. Number two, the inoperativeness is also because of they switching the service provider. Like in telecom, because of some schemes or some good features, they might switch from one bank to another bank. So that could also be one of the reason where the inoperativeness can set in. But the responsibility of financial literacy, again, lies with multiple players, and then collaboration also is key. Like in the recent past, if you've seen, Google themselves have joined the bandwagon where they started educating people about not to share the password, with full-scale advertisements and things like that. So I think it has to be a collaborative effort. And more importantly, with evolving technology, you've also seen a lot of people are made to believe and then share their passwords, credentials, and people are losing money left, right, center. It's again a negative effect of the technology. Where there is a convenience, there is also a con. So, which is where we'll have to, try to avoid this through literacy measures. And from our side, because since we are present close to the ground, we do a lot of financial literacy activities, and we also try to identify some of the champions, especially among the women folk who can go around and spread the word. It's an evolving process.
So I'll just add one thing. So, of course, he said, technology has its, the other side, so hence it's very responsible. But technology can be a great enabler of much, it can really catapult, because what the government and the industry is also doing is, we have so many diverse languages. So how do we ensure that there is speech recognitions in different languages, so that, from a financial or the literacy of that person, they can ask any questions in any language to the phone or whatever they can use, and they can get the response, the right response from the government agency as to what we can do. So technology can be a huge enabler, along with, if you can work with all these sites, I would say.
And, just to add, so the onus lies, as you were checking, the onus lies on the banks and these. So the RBI has come up with a circular wherein it has clearly mentioned that the bank should have dedicated officers who would cater to a financial inclusion sector. There would be and who would actually give financial literacy and make aware about what are the programs, what are the credit facilities, what are the other inclusion facilities which are there. So I think that's where the onus is, like it is governed by RBI and the ownership lies on the banks, in terms of driving these programs and all.
We're extremely sorry to cut down the Q&A session because some of our panelists had their meeting scheduled. We would now like to move on. On behalf of the Finance Club and everyone present here, I express my sincere gratitude to all the panelists and Dr. Prateek Bedi for conducting the session. And now I would like to request our Director General, Dr. Himadri Das, to kindly present our guest speakers with a token of gratitude. Beginning with Mr. Siddharth Talwar. Mr. Mitesh Desai. Ms. Aruna Singh. Mr. Manav Mehra. And Mr. Venkatram Jayanti. And Dr. Prateek Bedi.
As per the insights inculcated by our esteemed panelists, the panel discussion revolved around various strategies and plans for keeping the businesses ongoing. Post this session, we feel relatively more aware and equipped to understand and subsequently bring about the innovative practices in today's business environment.
We are honored to announce our esteemed partners and sponsors for Conventus 2023 at IMI New Delhi. Their support and collaboration have been instrumental in making this event a resounding success. We extend our heartfelt gratitude to Phoenix Global, Recode Studios, RPSG, Fresca, Power Grid Corporation of India, The Hindu, Easy Diner, Silgo Retail, Orient Electric, Business Standard, Messrs Sham Stores, Belgian Waffles, The Tarzan Way, Segal Doors, Safe Express, ICICI Bank, Caplots, Adda 52, Mad Over Donuts. We would like to thank the sponsor for the summit, Bank of India.
So ladies and gentlemen, with this we conclude the Finance Summit. We are certain that the session has been very enlightening for each one of us present here. I would like to take this opportunity to commend all the guests, panelists, speakers, professors, sponsors, students, and the staff of IMI for making the session an unparalleled success. Thank you all for being there.